Welcome, everybody. I will call the September 22nd meeting of the Audit Committee to order. The agenda was circulated. I would like someone, if they would, to approve the agenda, please. Councillor Emery, is that your hand up there?
Yes.
And a seconder, Councillor Fothrop?
Yes.
Thank you very much. Minutes from the previous meeting, July 20th, 2021 were circulated. Are there any errors or omissions detected? If not, then I would ask someone if they would approve the minutes, please. Councillor Landry, thank you, and a seconder. You need a seconder. Councillor Fothrop, thank you very much. Are there any objections? Then the minutes are deemed approved. So we will move on to the presentation of audited financial statements. And sorry, I'm just not sure. Is this you, Mr. Milner, or Mr. Hunter, that will begin with the Town of Amherst Consolidated?
It'll be me to start. It will be me.
All right.
I'll do the statements, and then Mark will do
vote.
the audit findings letter and the representation letters. And then Sarah will do the first quarter financial report.
Sounds good. All right, then. Town of Amherst Consolidated, please.
Do we have the screen shared, Natalie? Or?
I'm having some difficulty. My apologies. I am trying to screen share. But
You had it before, but it was the other monitor, I think.
I know.
Yeah, okay.
Kim's coming to help. My apologies.
Mike, you went pretty quick. So you're doing the 4.1.
Yeah, okay. I'll present the Town of Amherst Consolidated Financial Statements.
Right.
The Amherst Water Utility Financial Statements, that's 4.1 and 4.2.
Okay.
Then Mark Milner will present the audit findings letter, the representation letters for consolidated and water utility, that's 4.3, 4.4, and 4.5. Okay. And then we'll need recommendations from council to accept the statements. And then
I'll take that.
And then 6.1 will be Sarah. She'll present the first quarter financial report, and 6.2 the capital budget actuals to date.
Sarah does both those.
Yeah.
Perfect. Thank you so much.
Thank you.
All right. You have the floor, Mr. Hunter.
Okay, thank you. So if we could scroll down, these are the consolidated financial statements of Town of Amherst. So this consists of the general operations. You'll see these are draft form until they get approved by council. So in the official version, there will be a management responsibility of letter and an independent auditor's report. Those don't get signed until after they get approved and then get distributed out after they're approved by council. So if we can go to page 4, I guess it's page 7 on the bottom right of your screen, Natalie, and that's this one right here, consolidated statement of financial position. So this is a snapshot of the financial assets and liabilities and non-financial assets and reserves of the town. And this is consolidated, so this includes everything, including the town's share of Cumberland Joint Services Management Authority. So you'll see in the notes detail breakdowns of some of these too. I won't go through the notes in detail, but just a quick snapshot of the financial assets. So we have cash and cash equivalents of 9.9 million, which is up from the year before. Receivables are almost 1.2 million, which is down from the year before. So total cash and receivables is 11,153,000, which is up from the year before about $800,000. We're in a better position. There's less receivables this year and more cash on hand at the end of the year. Last year, because of COVID, we would have had a little bit of lateness in collecting receivables just because of everything that was going on with COVID being new last year. On the liability side, we have payables and accruals, 2.1 million. Deferred revenue for 150,000. Long-term debt is down from the year before. It was 8.1 in 2020. It's now down to 7.3 million. Pension liability, 794. and then provision for landfill closure, 1.5 million. So our net debt means liabilities in excess. The way that shows there, it's more liabilities than financial assets, which is $1.2 million and was $2.1 million the year before. So that's to the good in our favor by almost 900,000. Non-financial assets. Does anybody have any questions about the financial assets and liabilities? No? Okay, if you have questions, just raise your hand. And then the non-financial assets consist of prepaid expenses, inventory and supplies, deferred grant. That's new this year. That's the solar garden. So we're required to present on our financial statements the fair market value of what would be if we were to lease or rent the land. That's the fair market value of what the rent would be. The actual rent was for $1 to Nova Scotia Power for 30 years to provide the solar garden that's in the industrial park. So there's a deferred grant there, and there's also a deferred expense as well related to that. Tangible capital assets consist of 66,700,000. That's up a little bit from the year before. So that represents all the capital additions we did in the current year, less depreciation for the year or amortization of the capital items. And then at the bottom, we have accumulated surplus, which is 65,936,000 compared to 64 the year before. And then there's a small amount there for remeasurement gains, which is investments in Cumberland Joint Services Management. Does anybody have any questions about that page? Okay, if we can go to the next page. This is the consolidated. Now I'm going to go to the general fund later. That would be our main operations, but this page is consolidated statement of operations and accumulated surplus for everything combined, which includes the town's share of Cumberland Joint Services Management. So in total, we had 21 million in revenue, which consists of taxes, grants in lieu, services to other governments, sale of services, other revenue from own sources, and then transfers from other governments. And so that totals 21 million. And it's down from the year before. Last year we had 22,681,000, and that's mainly due to COVID. Okay, so if we go down to expenditures down below, our total expenditures were 19,800,000, and everything's fairly consistent there with the year before. I'll detail the COVID savings later on, but our annual surplus for PSAB purposes, which includes everything, is 1.2 million, which is down from the year before, 2.6 million. If we go to page, I won't go through all the notes in detail, but if we go, I just want to point out, these are draft statements, and in between the time we presented them or filed them for eScribe and the meeting, there's some typos that we've identified that will be updated between these ones and council. So if we can go to page 26, that's the bottom left corner, Natalie, on your screen. So it'll be page 26, which is the long-term debt. There we go. Okay, so I just want to point out here, there's a few of these items where it says principal payments for each. I won't go through each one, but between this version, if we're comparing this version and the version that will get approved at council meeting, we'll have updates to the principal payments. So I guess, yeah, the first one, I guess, the top one on the top, if we can go to the top of that page. Right here. Okay, so just a little bit more. Okay, so when it's where it says principal payments 86,680, that should be 204,180. The next two items are correct. Then the one that says 63,122 for principal payments, that should be 60,322. The one after that, 93,16, should be 93,18. Then the one after that, where it says 166,700, that should be 175,100. So those items will be corrected on the final version that goes for council approval. If we can go to the next page, note 20 on the bottom, it's the last note on the bottom of the next page. Just one more down, yeah. So this one, the title of this one has changed from present value of fair market value lease of land for solar farm to land lease NSPI, which is Nova Scotia Power Inc. dash solar farm. So there'll be a slight change there. And then on the following page, on the bottom of that chart in note 21, it says going concern unfunded liability for 2025. The amount there will change to 111,525. Okay. That's it for note differences between this version and the last version. So if we could go to page 33. That's the one there. So schedule of operations, general operating fund. So this shows the main operations of the town, excluding Cumberland Joint Services Management. So this will give you a better idea of the activity of the town that we control. So you'll see total revenue is 17,873,000 compared to budget of 17,750,000. So we were up in revenue a little bit from budget. The main increases were 532 was in conditional transfers from government and everything. And then we were down a little bit in a couple other areas, but and then taxes were up a little bit higher than budget as well. So that would include water taxes and property taxes as well. And compared to the year before, it was up about 540,000 in total. And then our expenditures were 15,201,000. And they were down from the year before of 15,838,000. So we ended up with an annual surplus before financing and transfers of 2.6 million. That gets used up as follows. So financing and transfers, that 2.6 million gets used. So 735 of it goes to debt principal repayments. Then we had, in addition to that, we had 135 come in from a dividend from the water utility and transfers from reserves. And then we transferred to reserves 105,000 and transfers to general capital of 621,000. And then the transfer to the operating reserve is the 1.4 million. So that would be our net number after financing and transfers that was considered income to the town. That consists of 817,000 directly related to COVID savings. There was an extra 108 from sewage. And then we had a difference in community support area rate of 11,000. And the mandatory provincial contribution area rate was 41,000. And then we had, those are mainly due to COVID and differences there, increases. And then from general operating, we had a surplus of 439,000 total. So that's the breakdown of that 1.4 million. And it's considerably higher than the year before, but that's mainly due to COVID and then a little bit extra from in general operating from vacancies during the year. Does anybody have any questions about that? Okay. That's it for the town the town consolidated statements. So if we want to go to page 39, if nobody's got any questions for that one, this will be the town of Amherst water utility. So if we could go to page, we'll say page 42 on the bottom, it's the statement of financial activities. Okay, so this gives you the revenues and expenses for the water utility. So we have 2.2 million in total revenue. That mainly consists of metered rates of 1.2, fire protection 800, flat rate of 166, public fire protection of 807. And then the rest are some smaller amounts there that make up the remainder. So that's almost right in line with budget. We had budgeted $2,237,000 and our actuals was $2,260,000. And the prior year was $2,222,000. So it's very consistent with prior year and budgets. There's nothing really major there with as far as variances. And you'll see the same thing if we scroll down just a little bit so we can see the total operating expenses. So we had 1.9 million in total expenses and we budgeted 1,950,000. So we were a little bit below budget in our expenses and a little bit higher than the year before, but it's almost the same as the year before. So everything's consistent there as well. So our net operating revenue from the water utility was 351,000. Then we had interest income of 5,226. And then non-operating expenditures consist of debt charges. So we see principal payments of 83,000, interest payments, 19,000. And then we had a transfer to water capital to pay for capital items and water of 114,000. And the dividend back to the town of Amherst consolidated of 135,000. So our excess of revenue over expenditures was 4,800, which is very close to break even and almost the same as last year. And we had a surplus at the end of the year of 183,000. Does anybody have any questions about that? The rest of the notes, the rest of the statements contain detailed notes. And I won't go through each one in detail, but the main part of the statements are there. And if anybody's had any questions after the meeting, they can contact myself or Sarah at Town Hall. Thank you very much.
Well, thank you. Excellent. And so that takes us now to the audit findings letter. And Mr. Milner, please.
Okay, well, good afternoon, everyone. The audit findings letter that you see here on the screen, it accomplishes a number of different things for the audit committee, but it literally just gives you and gives us an overview of the status, where we are, what's left to do, and pretty much everything is done, with the first couple of items just noting what's still left to do in terms of completing the full circle and the complete engagement. So there is a signed representation certificate which requires approval and sign off. And so that is in the package today. It is the management letter, so that it is signed by, in terms of governance, it's signed by Jason and Mike, but wanted everyone to be able to see the content of that letter that they will be signing as part of the wrap up of the audit. Also, to yet to be complete is the discussion that I'm going to have right now with the group. And then also too, following that, then there would need to be the formal approval of the consolidated financial statements. And so therefore a recommendation from this committee, and then a passing of the formally at the next get together of council. So I will just roll through this letter, and if at any point you have a question, by all means, just let me know. Make a beckoning or a noise or something to interrupt, and I will answer your question at that time. So firstly, we are to indicate if perhaps there was a bit of a difficult working through the audit. So I'm pleased to say that we really truly had no significant difficulties that were encountered during the audit. Secondly, every year is different depending on the activities of the town and areas that they may branch into. And so that may from time to time involve the introduction of new accounting policies. So I will share with the group that we have in fact a circumstance which calls us to consider the changing of an accounting policy. And so this very comment was in fact part of the same discussion last year, there was to be an effort made to come to a conclusion, and albeit there were efforts made during the year, and I believe even attempting to reach out at a provincial level to get some determination. It hasn't happened as of yet, but it will happen over the next months. So we've included this comment here as it relates to the commercial development support program and the phasing in of the commercial assessment. And so there are two alternate ways to be considered in presenting in the income statement the expense or the rebate piece that exists to the extent that the amount of tax that's being earned as a revenue in any given year as we move through that 10-year phase in that the program is made up of. That rebate, it either can be shown in the expense section as a rebate, or perhaps as well, it could be shown as a reduction or a netting down of the actual commercial revenue. And so fair amount of research to date and looking at the PSAB guidelines around revenue recognition. And it really strongly points towards having it be a netted revenue position. However, we also continue to go out into the marketplace and see how other municipalities are treating this. And there seems to be a continued treatment as a rebate expense. So for the current year, that is how the statement has been put together. With that amount that's being allotted to reduce overall commercial tax for those participants. It has remained in the expense section, but this will be further investigated and a conclusion made over the coming months. Okay, so any questions on that? Okay, if not, we'll just continue. Another area that
I have a question on that, Mark, if you will.
Sure.
I was going to say, Mr.
Yeah.
McDonald, I saw your hand go up.
Thank you.
Please.
Are we treating the tax reduction policy the same way we do for the commercial phase in, the same way we do for the tax reduction policy, say for nonprofit organizations?
For a nonprofit organization?
Yeah,
Or-
I might not have gotten, we have a policy where we reduce property taxes for certain organizations or exemptions.
Oh, yes. Okay. So in that case, I believe that just results in that tax being written off. And so it is on the expense side too.
Okay.
Yeah.
All right.
And the other place where we see that is the program for low income, overall family income, and where there's a qualification for that. So that as well, it would be another example of that type of offset. So these will all be receiving that consideration as to whether they perhaps continue to be treated as an expense or whether in fact they might be treated as a net revenue.
Thank you. That was my point there. We're going to treat them all the same or
Yeah.
is one different? So that answers my question. Thank you.
Okay. Okay, so I'll just move into the next section. Next, we talk about the fact that a lot of what is making up the content of the financial statement from time to time can involve the use of accounting estimates. And so in the case of the town of Amherst, we're not necessarily in a place where we have estimate calculations that are complex in nature. So there are policies in place that have been followed for any number of years. So for example, the allowance for doubtful accounts, there's a policy on that which tells us how we should do it, and it was applied consistently, and it seems to provide, it achieves what it needs to. It provides an estimate of uncollectability and nets down and shows you a smaller accounts receivable number in this financial statement because of the allowance. And I'm also just noting the allowance for doubtful accounts. Wow, okay. We can probably fix that. The other area where we might see estimates being used is in the valuation of inventory. So anytime we have inventory that perhaps may have become old and unusable and this sort of idea, then there can be an allowance for effectively bringing it down to its realizable value, what value it can add to the organization. In the area of accrued liabilities, so this is where we have had a service or perhaps something tangible and concrete that we've purchased, but we haven't yet had an invoice, so we don't have it in our accounts payable. So in fact, we're making an estimate of what that true amount will be. And so that's another area of estimate. And then finally, in deferred revenue, again, we're looking at, in some cases, using some present value of cash flow over a stream of 30 years, as Mike referenced in this newest solar farm arrangement and lease that was put in place, whereby we are only truly having $1 per the actual lease agreement. But when we look to substance over form, there's a need to say, well, really what we have here is we've earned some lease revenue, and at the same time, we've kind of donated that, or we've got a grant making it free. So from this year and for the next 30 years, we will see an amortization or a bringing in the income and expense of both sides of that transaction. So based on our audit work performed, getting to the conclusion here, we are satisfied with all the estimates that have been made by management. Next, we look into the financial statement disclosure area of the letter. And
Excuse me, Mark.
Sure.
Sorry, I think Sheila has a question.
Oh, hi.
Hi, Mark. Sorry, just more curiosity than anything else. Like, when there is an actual doubtful account, like not necessarily the allowance of doubtful accounts, but when there's actually something that is uncollectible at that time. And let's just say we had it as $100 and normally 15%. And I do know that some things are at different tax rates for municipal rules versus, other businesses. But
Right.
when it's on the books for, let's say in this case, it's $115 because it was 100 plus tax that the taxpayer owed for a water account or a tax account or that sort of thing. Is the full 115 written off, or are you able to go back on the HST side as well?
Well, the collection of tax is in a normal profit entity. It's certainly a piece that you do when you have an actual write-off. But for example, if we had property tax and we had an allowance for that, we definitely wouldn't have to consider the HST piece of that. So likewise, when you consider the water bill, the HST piece, again, its relevance is not there.
Okay, I was just wondering if there's something built in that way when you can't recover it, but I guess because of the tax rules with municipalities is a little bit different.
Can I make a comment there as well?
Okay.
Sure.
Yeah. So most of the tax revenue that Mark's talking about, like property taxes, water taxes, or water cups, most of the stuff is exempt from HST. So when we have our valuation allowance, there was no HST collected when we incurred those revenues. So when we write it off, there's no HST to get back either.
Okay.
Stuff
Okay,
that would
I
have
just wasn't sure if like a bill that comes out, there is an implied amount of tax in that from your guys' side.
No.
No, okay, no problem. Thank
Now
you.
you could have a scenario where a revenue's been collected that's had HST charged, and that would be more on your commercial,
Mhm.
because you have that mixture of municipal calculation of HST, and then on top of that, separately, you have commercial activity as it relates to, say, the wind turbines and or some of your commercial rental and or as well at the stadium and that's piece. So I guess to the extent that there might end up being bad debts there, then yes, that HST would be, you'd go off separately and have as you would in your business, have an adjustment to your next claims.
Okay, no problem. I was just curious more than anything else. Thank you.
Yeah, okay. So we were just looking at financial statement disclosures, and basically the conclusion being that there's really nothing special that we need to draw your attention to. I mean, one of the things that is in the statements in the last couple of years, of course, is the description of the impact of COVID. So you can take a quick look there at the disclosure that's been provided relating to that, our ongoing challenge with this with this pandemic. So following that, I would go on to the uncorrected misstatements. So if we scroll up a tiny bit, and in this comment, I reference that there's an attachment. So I'm hoping everyone has that attachment. It would be, I think, probably the 4th page of this document. And so at this time, I would like to share sort of a numeric piece of content around adjustments. And then I would also share a narrative on 2 other items. Now, what I can advise is that, as I said earlier, from year to year, the audit process can, involve different scenarios. It can also perhaps from time to time change process. So in all past years, there would have been a, to the extent that we would come across a rather small item. We've talked about this before when we've talked about materiality and adjustments and whether we should or shouldn't be making adjustments. In the past, when there was an amount to be adjusted, even if it was smaller, it was the process which was followed was, let's adjust it. We're aware of it. If it's for $4,000 in this direction, by all means, let's adjust that. And that was being done all the while knowing and considering that when we are doing the audit, that we have this whole concept of materiality that is important. And depending on which entity is being audited, whether it be the water side or whether it in fact be the consolidated full set of statements for the town, both have a different materiality level, and this year's materiality level for the town is $360,000, not too much different than other years, and usually calculated as a percentage of overall gross revenue. So in this current year, as we had 3 or 4 little things, some were offsetting, one in one direction, one in the other, and that's what this schedule here helps to show us a bit of detail on. So 2 columns of numbers. One is BS, not to be confused with anything else, but balance sheet. And the other one is income statement. So when we are going down the income statement column, when it's a bracketed amount, it literally means a revenue or an improvement in the overall bottom line. So you can see that of those several items that are there, there was an overall pickup of $7,651, and that actually will be, those items individually will be dealt with in your current fiscal year, knowing that it is a very, very immaterial amount overall. So I'll just say a couple of words about each. So there was an amount in the accrual listing which related to an anticipated billing from Morneau-Chapelle around some possible structure changes with pension. And in just reviewing this year, it was a reality that there truly is no anticipated billing at this point. And I think with the change amongst staff, et cetera, there is no current conversation that's going on or has gone on in the past months that would require that accrual. So it's been effectively removed, and that's created a pickup or a lesser expense of $11,993. A review, the next item, a review of the revised lease of the Cumberland Regional Library within the Innovation Center, them taking on a little bit of additional space and having a slightly different rental amount. One of the pieces of that lease indicated that to the extent that there would be costs incurred to do a few renos as they made their way into the new space, there was a bit of a cost sharing arrangement there up to a max of $4,000. So I did ask what expense had been incurred, and sure enough, there had been quite a bit less than the $4,000, but there still had been a few dollars. So this $660, $785 is a valid amount that, according to that agreement, should be billed to the library, and it should happen in this current year. The next item, WA Reed, with the long-standing trust arrangement that the town had been taken care of, and in this past year with the transfer of responsibility for those trust funds moving somewhere other than the town of Amherst, there were some professional fees that were incurred, and those professional fees actually were netted down, and so the amount that was transferred out of the town of Amherst bank account onto the other organization was short of those funds, and it was in reflection. It was considered that that amount should in fact be borne as an expense of the town, and that amount in fact be also forwarded along to keep that full trust amount intact. So that's an expense, and it will happen in this current year. And then we had a small accrual whereby after the fact, the true invoice came in around Remo expense. So there was a $567 pickup there. And then finally, you have a significant revenue that comes to you each year, the HST offset revenue from the province of Nova Scotia. And again, it's really tough to know what that will be. It's kind of like throwing a dart at a dartboard a little bit, or the way I play darts. Yeah, it could be a lot like that. And so in this case, it was, the estimate was very close, but there was an $1,894.72 difference. So I hope I've managed to give you enough input as quickly as I can on those. Now, the other two items that I just wanted, again, the audit committee to be in the know on are at the bottom of this schedule. So we have the prepaid medical and dental premium balance, approximately 200,000. Now, in your arrangement that has been in place for any number of years with your current healthcare provider, there are probably 6 or 7 or 8 or 9 moving pieces of what otherwise results in a bit of a running tally that they have on behalf of the town. So, but the two biggest pieces, of course, are the original premium that is paid in for the year on a monthly basis, and then the actual claims that are made. But then there are other things like if there is a balance there for you, then it's earning some interest. And then there are some other pieces, and then there are fees, et cetera, et cetera. So long story short, the COVID happenings, they truly did make quite a difference on this fund, because what we had was a premium rate that continued to be the same, and then at the same time a significantly lower amount of claims being made. So what will need to happen is, because it's a very complicated area because there's so much input to it. We have both a unionized and a non-unionized groups of employees who are contributing, and we know that those two groups contribute at percentages that are not the same. So you imagine taking this big pool of money and trying to figure out exactly how you might, down to the penny, kind of adjust it back to every department and every area. So it'll require some thought for sure, because it needs to be done in a way that's fair and equitable and is representative of how the balance grew to be higher. So in discussion with Mike, and we had conversation on, well, if it's currently at 200, at what level should it possibly be? Because you wouldn't want it to be 0, because you need to know that you've got some room to move depending on how each year will roll out for you, because there undoubtedly will be different scenarios that cause it to be either an over or an underspend. So there's thought that probably something between 50 and 75 would provide you an adequate level in that fund that's on hand with your healthcare provider. And so to get there, there would need to be some type of a premium holiday, and it will need to be a premium holiday which ensures that it's most likely during a time of the year when your full staff is working, because with your seasonal piece, that's a tough one too. You wouldn't want to have a premium holiday during a time frame when in fact not everyone's getting the premium holiday sort of thing. So in any event, lots of thought going on as to how to equitably have that balance brought down to a more reasonable level. So anyway, it was a big piece of what we looked at. Mike brought it to my attention. And so I want you as well to have some insight into it. And then secondly, another piece is the West Highland Gym fundraising. This $146,000 of deferred revenue, which would show on the balance sheet as such. Deferred revenue meaning that we had monies come in, and because the expenses had not been incurred in the same year or had not been incurred yet, we don't leave it on our income statement. We actually adjust it off the income statement out of revenue, and it sits as a liability, as a deferred revenue on the balance sheet. And then when the expense happens, it's at that point in time that you would in fact then bring the expense and the related revenue onto the income statement. So this stems back to donations that began to be raised, I think as early as 2014 or somewhere in there, and through to the end of 16 perhaps. And then there was one small expenditure that original amount was larger than 146. But since that time, there's been an anticipated expectation that perhaps invoicing might happen from a particular party who was to invoice the town for their contribution towards the gymnasium project when that school was being built. And that apparently was not the case. And so now there's a need to effectively deal with this amount. And so the conversation is that it should be dealt with in such a way that the intent of the original contributors, those people who were donating for the good of children in an elementary school, that it needs to make its way back and be used for purposes that are very similar to that. So that's how the management team will be working to make that happen over the coming months. Any questions on that? Has that been discussed fairly fully previously, or?
Yeah, I can comment on that. So we've these items that are being pointed out in the audit findings letter, a lot of them are also picked up by our internal controls, and we're dealing with them as well. So to do with the small adjustments, those are things that Sarah would have picked up along the way. And because of the value of them, they get dealt with in the current year versus put back, and just the timing of it. Also, the same thing with the, can we scroll up there a little bit? Just the prepaid medical and dental premiums, that was detected by staff as well. And then because of the complicated nature of the treatment of it, it's not adjusted in the financial statements, but it's also below materiality. So that's something we're looking forward to fixing going forward in the current year. And then the funding for the gym fundraising, we've had initial discussions with that at a management level. It's donations that were received with a specified intent to be used for the gymnasium at West Highland School. So where the invoices haven't, funds were raised in excess of the invoices were received. So we need to have, as the town, we need to have meetings with the school and with town staff as well to make sure that those donations are used for similar nature to do with physical education for West Highland students. But that's the discussions we've had so far. These are all items that we're dealing with on an ongoing basis. But,
okay.
Do you have any other comments there, Mark? Yeah.
No.
I'm just going to say,
Yeah.
Councillor Christie has her hand up for a question.
Yeah.
Hi, I just on the prepaid medical and dental premium balance. So are the medical and dental self-funded by the town, or is it third-party funded?
Yeah, no, what happens with those is every year based on our claims, they determine a rate that we pay monthly. So we make a monthly payment, which consists of a staff contribution and the town contribution toward it, and it goes into a pool. So we pay in, let's say we paid in $200,000 for the whole year, and then as staff do medical claims, it comes out of that pool. Okay,
Yeah,
so,
I understand the concept, so, but
Yeah.
you guys are self-funding your premiums.
right,
You're self-funding the claims, okay, that's what I asked, so if you're self-funding the claims, would it
that's
not
how,
reflect in what you were able to offer for premiums or payroll deductions going forward? Because in the same breath, let's say
Yeah.
you use that exact same formula, but you had many more dollars of claims than you had premiums collected, it would reflect in the rate that you're then going to charge your employees going forward because you're self-funding yourself.
that's right, yeah. So
Right.
we've had discussions, initial discussions with the provider and they're concerned because the balance is way higher than it needs to be. So there's some different options there that we've been discussing as management initially. So they would like to see the balance, and Mark mentioned 50 to 75 or
Yeah,
75 to 100, whatever number we become comfortable with. There needs to be a pool balance there so that we don't go in the negative on that.
right, and
so
I can see
yeah.
where you don't want to ultimately just all of a sudden lower premiums for everybody, because then
Right.
you run the risk in 3 years, you have to jack them to double. I
Yeah, but
understand
they-
that quite yeah, so
What-
that is
what-
something that a lot of businesses are facing right now, just strictly because they couldn't get in and get the services done.
Yeah, and
So,
one of the recommendations from, or not recommendations, but one of the alternatives from the provider is that we give staff a premium holiday for a few months,
Mhm.
and that would reduce the balance down to where it's
Yeah,
where
and
it should
I
be.
guess adjust whatever you're running for 2022, 23, that also keeps the rates at the same rate.
That's right, yeah.
Okay, so just long as that's kept in consideration with whatever the premium holiday, I would hate to see that happen, and then you guys have to increase the rates because you're gonna get a significant amount of claims go through.
That's
Now
right.
that things are opening up, so just you'll have to be very cautious about that, but thank you. I just was wondering if you're self-funded or not, more so,
Yeah.
and that would drive this for me more than anything else. Thanks.
Any other discussion on that point? Or these 2 points? Okay. All right, well, we've invested a fair amount of time here, so I'm pleased to indicate as we roll through the rest of the letter that, and there's no need to go back. The deficiencies in internal control, we noted none, because this is about significant deficiencies, et cetera. So, and we didn't have significant nor insignificant deficiencies that we wanted to bring to your attention. So we're telling you about that in the balance of this letter. And that really wraps up the content that I wanted to be able to share today. Okay. Now, I did mention in terms of the management representation letters that, well, the other thing too is, and Mike had, I believe, mentioned as well. So in the draft statement that we're looking at today, in fact, there are 2 reports missing. One would be our third-party independent auditors report, and the other one would be the management responsibility page, because again, it's in the audit experience, it's about 2 parties, and management plays a significant role, and hence you all attending today in your role as audit committee members. So the management responsibility page is at the beginning of the statements, but we put it there only at the point that it's going to be approved. So that will be at the next meeting that this statement would, assuming that the motion today would be that the statements be accepted as they appear. So this management response representation letter, it very much follows and has content which is consistent with what you see both in that letter that I've just mentioned, and very much as the audit planning letter earlier on that spoke in great length at who's responsible for the statements, that being management, and who's responsible for doing the third-party audit, that being our firm. And so I didn't want to spend time going through these. They're 3 pages long, but I did want you to just know this is a piece of the process, and the signatures that are provided by the town of Amherst are, again, on behalf of those who are touching things on the day-to-day more so. So again, it's Jason, and Mike that sign on these letters on behalf of the town. So both very similar in content, one for the utility side being a separate engagement and one for the overall consolidated side. And really, that's all I would comment on those.
Well, thank you very much. Mark, does anyone have any questions about this before we move on? Last chance. Okay, well, thank you very much. So then we've heard the town statements and then the water utility statements, and it's our job now to, starting with the town statements, we need to make someone to move to accept these and take that to council on Monday for proper acceptance. So is there somebody prepared to make that motion, Councillor Landry?
Yes, Your Worship, so moved.
Thank you. And Councillor Bothrow, you're seconding?
Yes, I am.
Thank you very much. So on recommendation to accept the town statement be moved to council. If there are any nay votes, please raise your hand for a nay vote. Seeing none, that motion carries. So similarly now, the water utility statements, I would like a motion to move those to council on Monday for acceptance. Who would like to make that motion? Councillor Emery, thank you. And seconding, I see Councillor Christie's hand up.
Yes.
All right, are there any questions or any further discussion? If not, then I will ask for a vote again. Raise your hand if you have a nay vote, please. Seeing none, that motion carries unanimously as well. Thank you very much. And thank you, Mark, for your valuable information. So now we will move on to the first quarter financial report. And I guess, Sarah, you have the floor.
Okay, thank you, Your Worship. Okay, so I'm going to kind of quickly work through this in the essence of time. So this report is similar to what you've seen in the other quarters in prior years. So this is for the first quarter. This covers April to June 2021. So moving on to the next page. So this next page is just the organizational structure of the town. It just shows the different departments in the hierarchy, and then below shows a little bit of narrative of what's inside of each department. And the next page, this is just a graphical representation for the general operating fund of the same information that's on the next two pages. So I'm not going to explain a lot of detail here. I'll move on to the next page. So this page here, this is basically the income statement for the general operating fund at the end of June. So you'll see at the top part of the screen, the revenues were over budget by 25,644. And looking up in the lines, you'll see most of that is under the taxes revenue. Included in the taxes revenue, this is D-transfer tax. And the D-transfer tax is really the sole reason for the revenue in that category being over budget. So obviously with the housing sales and the hot market, we've incurred a lot more D-transfer tax up to the end of June, and even going since then than we had anticipated. So that's great for our revenue stream. Moving down into the expenditures section, you'll see that the expenditures were under budget by $270,880. The majority of that is in wages and benefits of approximately $227,000. And in that $227,000, approximately $144,000 of that relates to vacant positions. Some of those would be the new unsightly position that has just been filled, the crime prevention civilian position. There was a couple QP seasonal employees, a full-time QP employee. Our IT manager was vacant until mid-May. That gets somewhat offset down below in contracts and agreements. Our CAO, deputy CAO, we had some vacancy there from when Greg left and Jason's position until the end of June. Economic development officer, that was vacant from mid-May forward. We had a QP seasonal parks, that was vacant starting in early June. And then we had student vacancies. Normally students would have started earlier in May, but due to the May COVID lockdown, a lot of those didn't start until June. There's also savings in overtime, in public works and in the police department, and some savings in crossing guard wages. Also, some non-union step increases haven't been implemented in the first quarter. And then there were savings in group insurance for the police union. That amount came in lower than we had expected. And that those renewals came in after budget. So that really makes up the majority of the expenditures in the wages and benefits. I'll just highlight on a few other larger ones. So in the administrative costs, that's mostly made up of travel and conference savings in the first quarter that, you know, had hoped some might happen, and again, due to COVID, didn't. And then moving down, you'll see other municipal costs is actually over budget by 20,000. In that 20,000, you'll recall there's 12,500 that we received a donation from the Christie Foundation. And so that 12,500 expense that we paid out on their behalf is actually recovered down below in cost recovery in the 32,000. So it's a wash to the bottom line, but it does contribute to that line item being over because we don't budget for those sorts of things. Some other things that make that line item over are some IT services that we received from a contracted source until our IT manager started. So that overage kind of offsets a little bit in the wages and benefits as well. And then there were some tipping fees for organics and solid waste that were slightly over budget in the first quarter. And so down below, the next significant line would be in cost recovery. Again, I just mentioned that that was, you know, 12,000 of that was for the Christie Foundation grant. And then we had recoveries for employees who were out on short-term disability, and then insurance reimbursements for damage to town property and recreation grants that we didn't budget for. So at the end, that leaves a surplus in the general operating fund at the end of June of $296,524. We move on to the next page. This page is just a different representation of the expenditures from the last page. So this is just in a departmental form, and then it breaks down your mandatory expenses. So I'm not going to get into too much detail here, as this is just really a departmental breakdown of the same information I had. A lot of those, you know, wage vacancies that we talked about kind of stem into all of these different departments. There's probably not one department that wasn't affected by a wage vacancy of some sort. So that really makes up the majority of this. And if we scroll down a little bit more, you'll see in the mandatory expenditures, they're pretty much on budget at the end of the first quarter. The assessment services is slightly under. That would be because we had an estimate of our assessment budget when we did the budget, and then the actual came in slightly lower. Any questions on the general operating fund? Okay, stop me if there are, if you think of something. So we'll move on next to the water operating fund. So the water operating fund at the end of June, just scroll down a little more, please. The revenues were just slightly over budget by $4,000. Most of this is in metered sales, which would be consumption revenue, and then some other small amounts in flat water sales, bulk water sales, and some interest. And expenditures overall were under budget by $18,887, mostly in wages and benefits. There's a student vacancy in water, as well as some under budget amounts on overtime. And then the fiscal services amount, that is mainly due to a debenture issuance at the bottom of 1,676. The debenture, you'll recall that we had approved last November with Municipal Finance Corporation. You'll recall in my quarterly reports last year that it kept being delayed. We had thought it would be in the winter, and then it was the spring, and finally in May we were issued that debenture. So the debenture issuance cost came in slightly under budget than what we expected, and that's mostly that 1,600 there. So that leaves the water utility with a surplus at the end of June, the first 3 months, of $22,899. Any questions on the water utility? Okay, we'll move on to the balance sheet. So this is the balance sheet at the end of June 2021 compared to the end of June 2020. There's a note at the bottom, and just because we just did the financial statements that included CGSMA, it's important to note that these statements do not include CGSMA. So this balance sheet is just town funds. So it would be the general operating fund, the water operating fund, general capital, water capital, and capital reserve and operating reserve. So you'll see our cash balance is 11 million compared to 10 million. The debenture that we received in May that we were kind of bridge financing until we received it was worth about $1 million. So really that's the difference from last year to this year. And the receivables are down around 300,000. That's due to a large unsightly receivable that we collected last fall. Accounts payable and accrued liabilities, they're very similar. This is due to timing and payment of invoices. And in 2020, there was an accrual for the APA union contract that had expired, and that was paid out in the fall of 2020. Deferred revenue has increased slightly, and that's due to the addition of the year-end audit change for the solar garden lease. That was part of that, it's in deferred revenue. And then that's offset somewhat by the reduction in the ICIIP grant that we had last year, sitting in deferred revenue for the La Plancha River Station, and that project was completed year-end. Long-term debt has increased slightly, and that is due to the issuance of the new debt, but offset by debt principal payments. And looking down, you'll see the deferred grant, the solar garden. That's the one that Mark spoke about and Mike in their discussions. And that's also offset up above in the deferred revenue. And capital assets are pretty much the same as last year, and capital work in progress is down slightly, and that's just timing and magnitude of projects on the go at the time. Any questions on the balance sheet? Okay, hearing none, we'll move on. So the rest of this report, the capital budget that's in here is up to June 30th. So I'm just going to kind of skip past that because we have a later document at the end of the agenda. And the other narratives in this document are really just similar to what's in our budget report. So it just gives a reader some information and guidance on our rates and things like that, things that might be of information to a reader if they were new to this document. So if we move on to page 76, so this is the capital budget with actuals as of last Tuesday, September 14th. So there's not a lot that I'm going to say here. I'm not going to go through line by line. My overall comments are that most projects are in a work in progress stage, meaning they're started but not completed. And you'll see there's a lot of blank lines there. For some, they may be started and completed but not showing on this report, just based on a timing of the invoices coming in and capturing the costs in our system. But I know that most projects that we have here showing are at or within budget. There may be a few projects that are showing over budget, but if they are, they're covered by savings of other projects that are under budget within the same category. Any questions on the capital budget?
Don't see any hands.
Okay, well, that's my quick review complete then.
Well, thank you very much, Sarah.
Thank you.
And again, if anyone thinks of a question that when they peruse some of this and want more information, feel free to reach out to Sarah or Mike. And there you go. And that actually completes our agenda for this audit committee meeting. And so if there's nothing more, I would entertain a motion to adjourn. Councillor Landry. And seconding. Councillor Emery. Thank you very much. If there are no objections, then the meeting is adjourned. Thank you all very much and have a really good evening.
Just want to say thank you to Sarah and Mike for their work on this. And I think Mark is gone, but thank him as well. And everybody have a great night.
Good
Thank
night,
you.
everyone.
You.
Okay,
Good night.
bye all.
Good night, everybody.